Yes, the IPO market is coming back. I look at all these companies that are going public. I don't want to invest in any of them. And let's just go through the list of the companies we're talking about here. So Circle, this is a crypto company. It's specifically a stable coin company. And basically what that means is they issue this stable coin called the USDC coin. And it's a cryptocurrency that is pegged to the US dollar. And the reason that you do that is to make buying and selling different crypto assets easier. I mean, the whole point of crypto was to not rely on the dollar. But what the industry is realizing is that all these other crypto assets are so unstable and so volatile that the only way you can really transact is to create a fake US dollar to lean on the stability and the security of the US government. They are simply going back to the US government to borrow more credibility. So in other words, the hottest new company in the IPO market is basically a shell company that holds US treasuries. This company CoreWeave, which is this cloud platform, it was another very splashy IPO. People were pretty hyped about it until people started to realize that this company is almost entirely dependent on NVIDIA. And then you just look at the other companies that are in the pipeline. Klarna, which is a buy now, pay later company. And what they have found is that in the past year, they're seeing a 20% rise in losses due to credit defaults because young people are increasingly using Klarna and then they're just not paying the money back. Another company going public, Gemini, that's the crypto company that was founded by the Winklevoss twins. They were sued a couple of years ago by the New York Attorney General for defrauding customers. I look at all of these companies, I'm like, that's company, that company, that company. And it's a shame because there are a lot of companies that I would love to invest in. I mean, I think of SpaceX and OpenAI and ByteDance, Stripe, Databricks, all the other AI companies, Anthropic, a ton of incredible, high quality, high value companies in there, but they're not going public because I think to your point, they already have the money in the private markets. Going public is kind of a headache. So why not just continue to raise the money in your venture rounds and then you just keep raising to infinity? I mean, that's why we keep seeing these series E, F, G, H rounds. This wasn't really possible 20 years ago. So then the dynamic is, what are the companies that are left over? It's these companies that probably the VCs didn't really want to invest in. It's these companies that only need to raise a little bit of money, that have these kind of precarious business models. And ultimately, you got the great companies that are for the wealthy investors, institutional investors, accredited investors, and then all companies are being thrown over to the retail investors, which is just not a great dynamic in my view.